Yo, what's going on, guys? Today we're going to be going over how to find a bias for the day and how to get entries. Basically, the whole strategy on like a quick explanation of the strategy on how to get entries using. I don't have a name for it yet. The 5 minute fair value gap liquidity Fibonacci low volume node strategy. Anyway, this is on FX Replay. This is Thursday, May 2nd of 2024. I have not traded this at all. This is I haven't looked at this at all. Here's how I would find a bias. This is market open though. 8:30 for my time zone. I could do the New York time zone. It's just gonna confuse me. Anyway, so what I see here, this is on the. What you want to do is you want to go to the 4 hour. And since price is fractal, meaning it does the same patterns in every single time frame, you can just do simple market analysis on the 4 hour to get a prediction on where you think price is gonna go. When I have a bias, I usually I mark out a draw on liquidity that I think price is gonna go to. My take profit is usually not at the draw on liquidity. I just use the bias as I'm more likely to take shorts today unless the market tells me otherwise. And then once our draw on liquidity is hit though, then we're done trading for the day. Unless we're thinking that market is going to be, say this is our draw on liquidity for this for whenever this was, May 1st. And let's say, oh, I think it's going to be bullish after we hit this draw on liquidity, then you can use it as that, as once it hits the draw on liquidity, flip your bias. Anyway, this is how I find draw on liquidity though. So going into this market open, I would be looking at, we are already in a bearish trend, kind of. We just, I wish it would show more price data over here, but it's not. So I'd say we're already kind of bearish. Then we just took out, we just tapped, price came up, we tapped this fair value hat, we had a very bearish reaction off of it. Did I say this was bullish or did I say this was bearish? Well, it's bearish. I don't remember what I said though, but we took out, did we take out this high? Or did we get equal highs? Did we take it out? Oh, it looks like we did. Yeah, we did take it out. But anyway, the main thing is that we hit this fair value gap, had a bearish reaction. We hit the top fair value gap right here, had a bearish reaction. Very large rejection off of this. And we just inverse this, and we're having some bearish reactions over here. So my bias is short, or bearish. My bias is bearish, but if we might come up again and retap it. That's what price likes to do sometimes. So we hit this, we might come up and then go down like that. I don't know, I could be wrong. That's just the bias. The bias is just a general direction that you think it might go. This is already looking very good. I don't know why there is no volume profile. Let me, why is there no, oh, there we go. So this is how you get an entry using the strategy. Really what I do is I look at where I think we're gonna go, Okay, so here's what I'm thinking. We are. Wonder why it's not showing. Okay, here's what I'm thinking. I was bearish on the day, and we had a pretty bearish market open. So what I would look for is, actually, let's go back to the 4-hour. I need to have a draw on liquidity in the opposite direction. We'll target the lows because there's no other fair value gap right here. And then we go back to the 5-minute. I mainly trade on the 5-minute chart. Since this is the recent high before we push down, I'm going to be looking to get an entry based off of the high of the range and the low of the range. And as you can see, this happens to line up perfectly with a very deep low volume node and a 5-minute gap right here. So now my entry would be at this level. Here are the levels. It would be at this level, the green, and we'd short. The trade would be this trade from the green level, 30-point stop, and we target that. We target the other level right here. We might get that, we might not get it. We'll see. And you can see the larger the range is, the higher our traded is. Okay, we are super bearish, and we just hit the draw on liquidity. And instantly had a reaction off of it. At this point, I would probably be very hesitant to take shorts because this is a pretty large, pretty prominent low. Though we have like relative equal. We can experiment with shorts. No, we cannot, because there's no 5-minute gap right here. That lines up with a low volume node. The obvious low volume nodes are kind of good to target and trade off of because price likes to go fill in the low volume. It's basically what a fair value gap is. So for me, I would think price would want to target this low volume node since it has not tapped it yet. Let's see what price does. Okay, this is pretty good actually. A little bit looks like you could have taken a short there, but it's not valid for me because there was no low volume node or 5-minute gap that lined up with. And we look for longs since 5-minute gap. Here's our level. Let's say we target, there's a low volume node right here. It's kind of not the best, but now usually you target this with a 30-point stop, and then it would be instantly take profit right there, but I'm kind of feeling risky, and so we're going to target this untapped 5-minute gap right here. Let's see if it hits, and that would have hit. So you can see that once we hit our draw on liquidity, these are like very high liquidity lows right here. We could take the inverse of our bias bias was short, but we hit this super prominent draw on liquidity, and so we switched our bias because we knew there'd be a reaction off of that, and all we did was take a continuation trade. We saw the bullish reaction. There was a 5-minute gap and the fib level. It came down, tapped the fib level. The 5-minute lined up with the low volume node, or was like relatively close to it, and that instantly TP'd. That's a 100-point trade right there. And you can see that just look at that. I don't know another strategy that's gonna let you bottom tick like that. And usually what's good about this strategy is that if the trade's not gonna work, you can usually tell by the reaction off of this level. If it doesn't have that strong of a reaction, it's probably not going to work. Like the trade that I took today. My entry was like right here, and we just kept pushing all the way past it. And so that's why I was thinking to exit early. Maybe save some drawdown, but shouldn't have done that. You need to let your trades play out. The trade was actually correct. I just didn't have the correct entry because I didn't put the fib on the entire range of the move. Let's see if the opposite would work out. So this is going to be at that third level. This is like the last resort. You can see usually price, if it comes straight through here and doesn't, or it taps it once and then it will not respect it this second time, it will come up here, and sometimes it goes from this all the way down to here. Let's see if that would play out. I don't usually take that trade, but let's see if that would play out. And good thing you didn't take that trade because it did not work. But you can see we did have another 5-minute gap low volume node. We did have another 70-ish point, 69 point reaction off of a 5-minute gap, which is right here, and a very large low volume node. You want the deeper the better, and the wider the better. Not too big, because if it's too big, it's going to want to fill the whole thing. Like if sometimes there'll be a massive move like this, and the low volume node will look like, it'll look like this, okay? When it looks like this on the side, it's kind of hard to judge where its price is going to react. Yeah, so you can still trade this based off the fib level. The fib level is a great tool to get entry. But 5-minute gaps and low volume nodes are where you want to target your entries. And the fib tool, all of it. Let's go to the next day to get another example. I hope that was a okay explanation. What time is it? Okay, we gotta hurry though. I gotta go. Hold on, fast forwarding to the next day right here. Okay, it is 8:30. Look at the 4-hour to determine bias. So, what do we see? Price is coming up, and it looks like it's not respecting this at all. What I do see though is what is a really good tool for bias is, since price is fractal, you can see the bias. So this already looks very, very good. We have a big fair value gap right here, and it's coming up to this key level. What I do see though is that price has already come up, tapped it, and hit. We just saw this in the last trade. Price hit the fib level, came down to take profit, and then all the way back up to here. So my bias is probably going to be long, but I'm expecting a little bit of retracement potentially. We're going to be looking for longs, and we can probably target this first inverse right here. That's probably a reasonable target. Hope that made sense. Oh, this is looking very good already. We already had a news candle. We like news candles. Oh look, that's the low volume I was talking about. That shape is not very good, as you can see. There's no real place to get entry, except for there is. Let's see what happens. Okay, we want a retracement, hopefully. Perfect. No entry yet. Still no entry. This is super bad price action, actually. This is super choppy. In fact, we want to just let this run. It might be a no trade day. Okay, as you can see, this is a no trade day because we had a very small range. We did not. Well, we had a 150 point range, but we didn't. We didn't come down to our longing area right here. So it's a no trade day. Unfortunately, that's devastating because news candles are great to trade off of. News candles, if you miss say the fib level is right here, if this trade doesn't work out and it sweeps the low, you can almost always look for the larger range, and it has hit it, and it's going to go higher. News candles are really good to trade off of. I would probably stay away from full porting your account using the OSOC strategy, times at 920. I would stay away from trying to do the full porting strategy where you just put a short position like down here with no stop loss, and a long position, let's say like right there, like below and above this candle, and so whichever way price goes, it will just hit it. I would stay away from that because it's not as high likelihood, but that's the way people pass evals. But I've done it, but I've blown accounts doing it, so I don't recommend it. We're gonna do one more day this morning, and hope this is explaining it correctly or making sense. The confluence are 5-minute gap, your bias, the fib tool, low volume node. That's 4 confluences. 4 confluences for a trade. And so let's see if we hit that level yet. Nope, as I said, we're still coming up here. So I think our bias is going to be the exact same. Right there. That's based on this inverse fair value gap right there. I like to have at least 2 confluences for each decision I make, besides the trade entry. The trade entry needs to be all 4. Or 3. The bias isn't always. Okay. So for this, the fib tool will be at this low right here. It will do it. I see a low volume node right here. By the way, this is a volume profile. Here are the settings. Takes total. I mean, you won't really need any of this, but here it is. This should be the same on TradingView, but TradingView, it's the anchored volume profile. It's somewhere over here. Somewhere, I don't know where it is. Somewhere over there. We need a 5-minute gap, which I don't see. So let's see what price does. Very bullish as expected. This is good. This is good. We like larger ranges. Okay, now this price action sucks. Look at that. All right. There is no valid entry here. There's a low volume node, but there's no 5-minute gap. So there's no entry here. You can see that would have worked based on just the low volume node, but it's not going to always work. And just like that, that's a no trade day, but our bias is correct. We came straight to where I thought. Actually, we went like straight to it, and I predicted that down here, I think. Anyway. What time is it? Okay. We'll see how price reacts off of our draw on liquidity right here. And that's going to be all for this video. It's already pretty long, 20 minutes. Okay, we're hesitating in this area. This is the retracement area. Or like, as you can see, it is directly in this area right here, this level. We might push higher, we might come down. Sometimes price just keeps on pushing, sometimes it comes down to here, and sometimes it comes down all the way here. It's one of those three. There's only 3 options for it. Oh, I just deleted it. Those are the only 3 options, because I don't know why, but that's the only 3. And it did the first option, it just kept pushing. So that's a, let me know if I explained that correctly or if that made sense. Again, it's 1, 2, 3, 4. First one you do is bias, then you drop down to the 5-minute, and you look for low volume nodes. Then what I do is I put the fib tool on the range. I try to see where 5-minute lines up. And then there's a 5-minute fair value gap. These are the confluences. Make this bigger for you. Shocking. Can't make it bigger. There we go. These are the confluences. This should be time frame. I like the 5-minute because if you go on the 1 minute, sometimes it will show like a bunch of little ones. Yeah, that's it for this video. And let me know if I explained this correctly. That's all. Peace. Peace out. See y'all.